Picture this. It's late. You've got a dimly lit room, the glow of multiple monitors just reflecting off the tense face of your average, everyday American trader. The adrenaline is pumping, the stakes are incredibly high, and they're about to lose absolutely everything. Welcome to The Explainer. Today we're unpacking a pretty dark reality, the psychology of the liquidated trader.
90%. Honestly, let that sink in for a second. That is the staggering failure rate of crypto traders. Almost everyone who plays this game, they're eventually going to lose their money. But why? Well, we're going to dive deep into the exact psychological trap that causes this devastating cycle to happen, over and over again.
Now, what's really interesting about this slide is the core question it asks. Is the market actually against them, or are they against themselves? I mean, most people think they just have bad luck, right? They think the system is somehow rigged to hunt their specific positions. But the truth? It's deeply psychological. We're about to walk through what's basically a tragic, inverted hero's journey.
So it all kicks off with Phase 1, the trap of early wins. It starts the exact same way for everyone, doesn't it? Our trader makes a few careful moves, secures a nice little profit, and suddenly, well, trading feels deceptively easy. The illusion whispers to them, hey, I figured it out, I've cracked the code. But the reality? It's pure false confidence. That initial green on the screen builds a highly dangerous illusion of mastery, and it perfectly sets the stage for disaster.
Which brings us rapidly to Phase 2, the overtrading addiction.
All that calculated patience, it instantly vanishes, replaced by the rapid, chaotic clicking of a mouse. Just one more trade. Suddenly, every small movement on the chart looks like an absolute must-take opportunity. Every single second they aren't in a position just feels like real money is being left on the table. The pulse quickens. They're completely glued to that glowing screen.
This time, it will work. So they trade again, and again, and again. It's this breathless, obsessive repetition. Win or lose, the immediate reaction is just to enter the market one more time. Those flickering candlesticks are pulling them in, totally overriding their logical brain.
At this point, we've completely left the realm of strategy, which, is calculated and disciplined, and we've crossed heavily into addiction. This is now compulsive. They're chasing the high of a win rather than executing a strict financial plan. A visceral, literal chemical addiction is unfolding right there at the computer desk. And now we enter Phase 3, blindly chasing the hype.
Operating entirely on impulse, our trader starts to doubt their own thinking. Anxiety creeps in. So what do? They frantically pull out their phone, scrolling through social media, desperately searching for external validation. Well, they said it's going up. They said it's the next big thing. They get trapped in this echo chamber of influencers, blindly following the hype just to feed their need for a guaranteed win.
Let's actually trace how this timeline unfolds. First, the hype builds online, right? Everyone is talking about a specific coin on Twitter and YouTube. Second, our trader, acting on pure emotion and a massive case of FOMO, enters the trade incredibly late. They buy in right at the peak. And third, the inevitable drop. It is the absolute perfect setup for a financial disaster.
And that sudden drop forces us right into Phase 4, throwing away the rules.
The very moment that red ink starts pouring down the screen, all discipline vanishes. This is the threshold of no return, guys. Panic sets in, no stop loss to protect capital, bigger position sizes to somehow make up for the losses, and then the terrifying mistake, going all in. The tension in the room is suffocating, but they internally justify it, thinking, just this once. I just need to make it back this one time.
Look at the mental gymnastics happening in their head right now. The trader tells themselves, I am investing. But the reality? I am recovering losses. They're desperately trying to convince themselves they aren't just gambling, but they are. They are risking absolutely everything just to get back to zero.
Welcome to Phase 5, the market trap. The atmosphere here is getting dark. The market begins to whip violently around them. First, a fake breakout. It looks like it's going back up, but then a sudden, brutal reversal. The emotional whiplash is just intense. A brief, agonizing moment of hope is instantly crushed by paralyzing fear. The market is moving with sheer speed, and before they can even move their mouse to react, they're entirely trapped.
Why is it dropping? It is a literal internal scream. You can physically feel the panic in the room as the red losses compound by the second. Our trader is just frozen in their chair, staring wide-eyed at a screen that is actively draining their life savings. Let's move to and see how this builds, mapping out this vicious emotional breakdown step by step. We started with excitement. That quickly turned into greed. Greed bloated right into overconfidence. But as the market turned, we hit anxiety. That spiraled into pure blinding panic. And finally, the crushing weight of regret.
I can't stop now. There's a deep, deep sense of frustration and complete helplessness here. It is absolutely no longer about winning. That dream is dead. Now, it's just about surviving. They just want the pain to stop.
This panic leads to erratic, devastating behavior. First, hesitation, when they really should just cut their losses. Then, panic selling at the absolute bottom. And finally, the final nail in the coffin, revenge trading. They furiously enter new, terrible trades to try and punish the market for taking money. And with this mindset, absolutely every subsequent decision they make gets drastically worse than the last.
And then, we reach phase 6, the liquidation. The frantic clicking stops. The chaos in the room abruptly goes dead quiet. 0.00. A chilling notification pops up on the screen, liquidation warning. And just like that, everything is gone. Not slowly over days, not over agonizing hours. Wiped out entirely in a matter of seconds. The screen is dark, the account is empty.
Which brings us to our conclusion, the harsh truth.
Let's take a deep breath and unpack what really happened in that dimly lit room. The market doesn't destroy traders. Their decisions do. Most traders don't lose because of bad luck or rigged systems. They lose because they chase, they rush, they ignore risk, and they trade without discipline. So the next time you sit down at your screen and feel that overwhelming urge for just one more trade, ask yourself, are you trading a strategy or are you just fighting yourself? Thank you for joining me on this explainer. I really hope this helps you keep a level head out there, keep learning, stay disciplined, and I'll catch you next time.